5, 4, 3, 2, 1. Hello, everybody. Happy Monday, and welcome to another episode of the Everything Medicare Podcast. Today is August 6, 2018. I'm your host, Christian Brindle, where every single Monday I bring you a podcast where I talk about your Medicare, your Medicaid, your Social Security, and everything that has to do with your retirement. And this podcast has been getting a lot of people listening to it, and I really, really appreciate it. Everybody that's listening, everybody that pays attention and follows, you're the reason why we do this. To bring free information in a world and on a subject where the information is scarce and, well, horribly put out there. I might as well just say it. Today we're talking about Plan F and why it is no longer viable. Now, first, to understand Plan F, let's talk about how Plan F originated. For those of you who don't know, I put out my second book earlier this year on Medicaps, and it goes into extreme depth of the origin of Plan F, but I'm going to summarize it a little bit for you. Plan F, Medicare supplements have been around since Medicare's origin in the 1960s when Medicare first started. However, Plan F didn't actually to come into the marketplace until 1992 when Medicare supplements changed into what we know today as Medicaps. They were very different and went through a lot of changes since Medicare started. But in 1992, we had our first Medicaps. Plan F was the most popular of these. So, Plan F has been around for 26 years. And for an insurance plan, that's extremely old. Okay? Now, anytime a plan is that popular and is around that long, especially in the Medicare world, where when people turn 65, they can get on a Medigap without any health questions, anyone they want with any insurance company, you're going to have a lot of people on Plan F. A lot of people. Not only that, there are other factors that come into it that I'm going to get into in the next segment. But Plan F has been so popular for so many years, and the main reason is because there's simplicity to it. It's the only Medigap right now where you have no copays, no deductibles, no out-of-pocket. It's full medical coverage. So whatever Medicare doesn't pay, the Medigap does pay. It doesn't leave any Medicare Part A or B deductibles, copays, co-insurances for any kind. And there's a lot of simplicity to that. People like the idea of full coverage. However, just because it's the only one that's full coverage does not mean that it's going to always remain the best and most viable Medigap. And today in 2018, 26 years later, after its inception, it is no longer. And it hasn't been for a couple of years now, and I'm going to explain why. Stay with me in segment 2. Welcome back to the Everything Medicare Podcast, and this is segment 2. Today we're talking about Plan F. Why is it no longer viable? Why was it so popular for my parents? Why was it so popular for me 10 years ago, if you've been on Medicare that long? 10 years ago, Plan F was the most popular plan available. It wasn't even close. Plan F has been the most popular Medigap that's ever existed for many, many years. And it was probably the most viable option for 15 plus years. For a lot of people. I mean, I'd say, if I had to estimate, I'd say probably 70% of people on Medigaps picked up a Plan F between 1992 and 2000 and maybe 11, 12, 13. And that's real. That's more impact than any Medigap has ever had, ever. Here's what happened, folks. Over a 26-year period, people have been on Plan Fs, and Plan Fs basically have had people on them since 1992, 1994, 1995, 96, 97, 98, 99, 2000. Still a long time for someone to be on one plan. When people are on a plan for so long, what happens? I know you know the answer. They get older, their health problems grow larger, their medical costs grow larger. This causes the prices of a Medigap to go up. The way the Medigaps work, essentially, there's two things you need to keep attention to on a Medigap. One thing is your starting out price. How much is it going to cost you? The second thing is your rate increases. And a Plan F typically goes up higher as far as rate increases go than any other plan in 2018. I can say this with certainty because I see it with my own clients with every major insurance company you've ever heard of. I'm not going to list any names. I don't want to get in trouble. However, there have been people, the way these pricing increases and the price variables work with Medigap is when you sign up for a Medigap, let's say it's a Plan F with XYZ insurance company, whoever that is. You sign up for this Medigap with XYZ insurance company, and you're placed into a pool of everybody else that's in there. And the average of everyone's claims determines the rate increases from year to year. So if you're part of a pool of people that are in their 80s, 90s, hundreds maybe even, people with health problems, that's going to cause your rates to go up more than normal. That's not the only reason, though, that people have been on them so long. Medigaps, some Medigaps, F particularly, have also participated in many years in a program called Guaranteed Issue. What Guaranteed Issue is once you have been canceled on any type of insurance, whether it be a group plan. Let's say your group plan decides they don't want to cover you any retirees anymore, which happens more and more in 2018 than you ever see. Well, you're on retiree plan. You have Medicare, but don't have anything else. Plan F with any single insurance company in the country is required to take you through a program called Guaranteed Issue without any health questions. It's a free shot. So if you're canceled anything, let's say you're in an area where a Medicare Advantage plan cancels everybody, like a county or even a state, which happens, you can get a Plan F with any insurance company, no health questions. So that plays a big role. I mean, you could have someone on dialysis jumping on a Plan F, someone on chemo, someone with chronic health problems, which affects everybody's rate increases. Not saying that it's a bad program, because it's helped a lot of clients of mine that really need the coverage, and I'm grateful for it. But going forward, it's dramatically affected the Plan F's viability. So you have health questions being thrown to the side at turning 65, which is with every Medigap. But once we have a Medigap with any company, you can't lose it as well. It can't be canceled. So as people's health deteriorates since the 90s and early 2000s, you have the cost, their medical care going way up as far as the expenses go. Then you have Guaranteed Issue. People coming in every year with all different kinds of companies. That affects the prices too. If you notice that if you pay attention, the Plan Fs have become more and more costly over the years. And that's why. For one, they're very old as an insurance plan. I mean, there has never been a Medigap older and that viable and that popular as the Plan F. And over time, they just deteriorate. In 2010, they came out with Plan G, Plan N, and some others. And those plans, there's not as many people on them. They're newer plans. They share some out-of-pocket. Like a Plan G, for example, you have a once-a-year $183 deductible, but typically you're looking at a $30 to $40 a month price difference. This isn't in every area, not every state, but most. And you save double what the deductible is in premium alone. And not only that, the rate increases don't go up quite as much as an F. Typically, at least half. So not only do you save money coming in, you save money long term. And the Plan G particularly, Plan N a little bit, but the Plan G particularly has participated in not as many new people going into the Fs. The only people that are on them are people that are continuing to get older, continuing to get sicker, medical costs continuing to go up, and going forward, I anticipate that the Plan Fs will skyrocket in prices. And I could be wrong, but that's what I anticipate. Plan G was a Plan F killer because of the circumstances and the timing. Not that it was a better plan, but today in 2018 it's a better plan. If the G came out in 1992, Plan F would be a better plan than Plan G. But it has a lot to do with timing. Plan G is 8 years old this year. Plan F is 26 years old this year. So Plan G is a much younger plan. There's less people on it, less health problems, and there's no guaranteed issue. Stay with me into segment 3, and we're going to wrap this conversation up. Everything Medicare Podcast. Monday in August. Every Monday, I bring you a podcast where I talk about your Medicare, your Social Security, your Medicaid, and everything that has to do with your retirement. I mix that order up, try to, every single week, just to keep it interesting. We're talking about Plan F today, and we're going to wrap it up in segment 3 here. Mainly, folks, these are the things you need to keep in mind. Because of the age of a Plan F and the age of the people on the planet, because the plan's so old, and the guaranteed issue factor. That's why there's multiple plans today in 2018 that are better than the Plan F, in my opinion. Because of the rate increases, because of the cost coming in. It's becoming more inflated than ever. In 2020, the Plan F will be grandfathered, meaning that anybody eligible for Medicare after 2020 won't be able to get it, so there won't be as many new people coming in, even though there's not as many now because of the Plan Gs and the Plan Ns of the world. But you won't have any new people coming in that are aging in, and the people continue to get older. So I estimate the prices will continue to skyrocket because of that. And that's what you got to keep in mind. If you enjoyed this podcast and you want to support us, you want to help us here, I own an agency called Christian Brindle Insurance Services that is part of a larger agency called Brindle Insurance Group. Here in Sandy, Utah, we work with people in Utah, Idaho, Florida, and we're always expanding that list, and we may be coming to an area near you soon. But if you want to help us out, leave us a review, a 5-star on whatever platform you're listening to this on, whether it's iTunes, Apple, whatever, Spotify. Leave us a review if you're able to. Share it with a friend who might be able to use this information, who could benefit from learning more about Medicare. In a world where the information is hard to obtain and it's very watered down through misinterpretation and people spreading wrong information. If you are on social media, follow us on your favorite social media for constant free information and content. On Facebook, Christian Brindle Insurance Services. On Instagram, Christian Brindle Insurance. On Twitter, Christian Brindle without the E because we couldn't fit it. On YouTube, Christian Brindle for educational Medicare videos. And on LinkedIn, Christian Brindle. Thank you so much for listening through this whole thing. And send us an email at christianb@xmission.com, christianb@xmission.com if you have a request for something you'd like to hear. And I will talk to you next week. Have a fantastic week and Monday.